Who pays the most taxes by age? Hey folks, Toby Mathis here with Anderson Business Advisors. And let me ask you a quick question. Who do you think pays the biggest share of taxes in America? Boomers, millennials, Gen Z, maybe the rich old guys with their yachts? Well, I just read a fascinating piece from Kiplinger, along with a bunch of data from the IRS and the Tax Foundation that broke this down by age group. And the results, well, they'll probably surprise you. They surprise me. So today we're diving into which generation is footing the biggest tax bill and why the system is built this way. And more importantly, what lessons you can use to keep more of your own hard-earned money in your pocket. Because let's be real, it's not about how much you make, it's about how much you keep. So first off, the article starts with a Gallup poll revealing that about 60% of U.S. taxpayers believe their federal income tax burden is too high, right? And the same survey where 50% of respondents think that income taxes are unfair. So that's a pretty high number. So just checking the pulse of Americans, and it seems like most people already feel that they pay too much. But who pays the greatest chunk of taxes that's actually collected? According to the data, Americans between 45 and 55 pay the biggest chunk of federal income taxes. In fact, that one age bracket shoulders about 29% of all income taxes in this country, according to the Tax Foundation. Now I'm talking federal income taxes. We're not even talking payroll and other things, right? So just let that sink in. That one age group, 45 to 55, pays almost a third of the total tax bill. They're also probably putting their kids through college, and they're handling their midlife crisis, and they're likely helping out their aging parents. Maybe that's why they're working so hard, right? Now, I know you really rich people out there going, wait a second, Toby. The top 1% pay over 50% of taxes. And yes, that's correct. The top 1% of wage earners pay over 50% of the total taxes in this country. But that's not an age group, right? This study was on age groups, and the folks who get hit the hardest, boom, 45 to 54. I'm going to say 55, but it's under 55, so 54. So 45 to 54. Now, why is that? Simple. That's when people are usually in their peak earning years, right? Careers are mature, businesses are humming, salaries are higher, more income equals more taxes. And remember, this is just federal income taxes. We're not counting payroll taxes, which would make it even higher, property taxes, or sales tax. Add those in, and the middle-aged are probably carrying even a bigger part of the load. Uncle Sam and your state and your local buddies, they love you when you're at your busiest. But how does it compare to everybody else, right? Let's take a look at this. So if I look at what we have, the 35 to 44, they pay about 20%. That 45 to 54 is at 29%. 55 to 64, it's still pretty heavy, but it's at 23%. 65 plus, it drops down to 17% as retirement income replaces wages, right? The under 25, so you're 25 to 34, very small slice. In fact, if we combine those, anybody under 34 is about 10% combined. So it's really about that middle of your life. You're carrying most of the country's tax load. Really, it's that what would that be, 45 to probably 64. You guys are the ones basically paying a big chunk of the taxes. Which brings me to a bigger point. Our tax code isn't just about income. It's about timing, when you earn, how you earn. I mean, I teach this over and over again about active income just getting hit the hardest when you're getting both your federal income taxes and your employment taxes. And then also when you spend it, right, and what you spend it on, all those things impact your tax bill. So let me give you a quick story. So I have a client, mid-30s, and she's crushing it in business, making 7 figures, but she came in looking cranky once, and I was like, what's wrong? And what did she say? A lot of people say this. I feel like I work for the IRS. Nobody else pays taxes. I know all these millionaires and they don't pay taxes, but I do. And you know what? She wasn't wrong. Between federal, state, payroll, property taxes, everything, about half of what she earned was gone before she saw it. And some people it's even more. And that's really for the peak earners. The better you do, the bigger the target is on your back, which is why planning, not just working hard, is what separates people who build wealth from those who make money. But what about the part on the millionaires? I don't think that's true. They just make so much that paying even like 15%, a smaller percentage of their total income, is a staggeringly large sum, but it's not a huge amount to them. They also have non-taxable wealth. Like, I did a video on buy, borrow, die, right? Let me just explain it briefly. If you buy assets, let's say stocks, real estate, anything that appreciates in income. If I buy stock at $100,000, or better yet, Bitcoin, since so many of you guys are investing in Bitcoin, you buy Bitcoin at $1,000 and it goes up to 100,000, right? You have $99,000 of growth that has not been taxed. You could borrow against it, right? And you could borrow, let's just say you borrow $70,000 and you go invest that into real estate. You never had to pay tax on that money. The rich and the really wealthy buy assets, and they know that literally with real estate, for example, I could sell my real estate and buy more real estate and pay no tax. I could do that over and over again during my lifetime until when I pass away, I have millions of dollars of real estate and I'll pay no tax, or my heirs will pay no tax on it because it steps up in basis. In the meantime, I've been borrowing against it. Or some of you guys know the infinite banking system or bank on yourself, and you know that you could do this even with something like life insurance, where you're borrowing against the policy, the cash value of that policy, or borrowing against the death benefit. And then when you pass, that is non-taxable. Like, there are people that do this, or Elon Musk. Everybody goes, Elon Musk, he paid this huge tax bill. And I would say probably not. Really small percentage, staggeringly large number. Again, right? The wealthy, hey, I sell some stock or I sell some real estate, and they would gladly pay 10, 15% on that all day long. They're not going to cry about it. It might be billions of dollars in taxes that they pay, a really small percentage. But more likely, he didn't really do that, right? He probably borrowed against his stocks that he owns, or if he did have to cash them out, he probably made a contribution to his personal foundation, his private foundation, or one of his charities that allowed him to offset that, or he did other investments that allowed him to offset, like oil and gas is a great example. I can get a huge deduction in the first year, or real estate professionals, or short-term rentals, or start filling in the blank. There's a bunch of investments that create big deductions. But that buy, borrow, die is something we see consistently, where they buy assets, they borrow against those assets during their lifetime because it's tax-free, and then when they pass away, the basis steps up and their heirs never have to pay tax on it. Again, I did a video on it. Maybe I'll find that link and we'll share it out. It's called the buy, borrow, die strategy. It's worthwhile learning and knowing because it's what the really wealthy do. Now, all of this is why the boomers pay less now. Like, maybe the boomers are figuring it out. So let's talk about them. Let's talk about older households, that's 65 and up, because they don't pay as much in income taxes anymore. And by the way, every financial advisor, they're always like, do you think your taxes are going up during your retirement or going down? You're crazy if you think they're going down. They go down. And here's why. Because much of your income comes from things like Social Security, which is only partially taxable. And they have a lot of things called qualified dividends and capital gains, which are taxed at lower rates. In fact, qualified dividends and capital gains are taxed at 0, 15, or 20% federally. If you make too much money, that top rate is actually 23.8 because you have the net investment income tax. But it's much, much less than the top rate is if you make active income, when you're paying 37%, plus you have employment taxes on top of it, which start at 15.3%, and you're still going to be at the extra 3.8% no matter what with Medicaid or Medicare, because you're still getting hit with it, right? Your employment taxes don't go away. When you're making active income, you always get hit. But when you're in retirement, that goes away. You also can structure your retirement distributions to minimize taxes. Heck, I could take my required minimum distributions and give them straight to charity. And this is the shift I want you to notice. The wealthy don't just make money. They design how they receive money, and that's called tax planning. So what can we learn from this breakdown? I'm just going to give you a few lessons. Number one is diversify income sources. If all of your income is W-2 wages, you're the IRS's best friend. You need to add things like rental income, maybe some passive business income, dividends, just to get more flexibility. In fact, the wealthiest people have multiple streams of income. We go over this over and over again in a lot of these videos. You gotta have more than one, and you gotta be making money while you sleep, not just while you're awake. You don't wanna be just trading your time for money, because eventually you don't want to do that. You don't wanna be using your time to generate income all the time. You wanna let them do it. Number two, timing matters. If you're 45 to 55, you are getting crushed statistically. But if you structure things right, by the time you hit 65, you can live on that lower taxed income, and that's by design. We can offset a lot of this huge income when you're 45 to 54, right? There are strategies you could use to lower that if you know that they're out there. So spend some time on this channel. In fact, like and subscribe. Helps me out, but it also will help you out. Subscribe so you're getting brain food, constant ideas of things that you might be able to do. One video may save you tens of thousands of dollars, but you don't know the question to ask, and sometimes you just see it. Lesson number 3, depending on how you're making your money, use structures. Because LLCs, S Corps, and C Corps, trusts, all these aren't just paperwork. They're shields, they're levers, they're tax-cutting machines if you use them right. And number 4, think of your legacy. Boomers who planned well are passing wealth tax efficiently. Those who didn't, well, the kids get to fight in probate court and pay some taxes they didn't anticipate. The structure matters. And here's what drives me crazy. People who complain about taxes but never do any planning. You wouldn't go into a casino and just throw your chips on the table, right? And just blind. Every April, millions of taxpayers do exactly that with their taxes. If they're smart, they file an extension and actually do that in October. We won't go there. They're doing it in April because they don't know any better. The wealthy, they don't play like that. They know the rules. They use the rules, and they make the IRS their unwilling business partner, right? I'm going to do what the IRS says. I can do this. Meanwhile, the middle class is stuck paying 29% of the bill because nobody ever taught them how to shift from high tax income to low tax income. And that's why I do these videos, because knowledge is money. And here's what you can do right now. If you're in your 30s or 40s, start building non-W-2 income streams, right? Side businesses, investments, rentals, get into real estate, any of that. If you're in your 50s, focus on transitioning into retirement accounts and tax advantage structures. Take the deduction now when you're paying the highest percentage. And it's called a delay. It's one of my Ds. I use 8 Ds, right? And delay is one of it, divide. I'm going to divide it into a 401k, an IRA, even a Roth. Yes, you can do it. You can do a backdoor Roth. You could do a bunch of these things. And I might say, hey, I'm dividing it so that I don't pay tax in the future, or I can take a big deduction now. And if you're younger, the biggest gift you can give yourself is time. Invest in things and allow compounding to do its best, what it does. Compounding works in investments and in tax pounding like magic. Let things give them time to simmer. It's like a slow cooker, right? The earlier you start, the less you'll feel that 29% hammer when you get hit in your peak years, right? You want to have your money just growing, and if I need money, I can borrow against it at 0. So who pays the most taxes by age? Well, middle-aged America, especially anyone that's 45 to 54. I'll say 45 to 55 for ease, right? But the real question isn't who pays. It's what are you going to do about it? You can either keep working hard and paying more than you should, or you can learn a few strategies that the wealthy use to cut their tax bills and build generational wealth. Hey, if you guys found this video valuable, please hit that like button, subscribe, and drop a comment. Best thing you could do right now for me is put down in the comments what age group you're in, and do you feel like you're paying your fair share or way too much? That's today's question, right? Just go down there in the comments and just say, here's my age group. Do you feel like you're paying too much? Do you feel like you're paying your fair share? And then until next time, plan smarter and keep more of your hard-earned money. Keep it in your pocket. By the way, just keep repeating this to yourself. Taxes are fun.